Alright, good morning. Let's go over today's trade plan. So in the overnight session, the market is yet again very balanced, and overall we can see that the market has been balancing in a range over the last three sessions, the range being 1914 to 1924 for the most part. And at this point we are looking for a directional break of this range. So it could be to the downside, it could be to the upside. Given the overall uptrend, as long as we hold above 1914 to 16.5, we can still favor buyers, and we can still get a break to a new all-time high. But overall, the main thing to keep in mind is that the market has been balancing and coiling in a range and is setting up for a directional move. So if we can get a pickup in volume today, that move could happen today. It's unlikely that we're going to continue to trade within a 8 to 10 point range over the next one or two sessions. So a break is pretty likely, and whichever direction we start breaking, we'll just focus in that direction. So right now, for example, if we're holding above 16.5, the focus is still more on the long side rather than the short side. In order for us to take a proactive short, we would have to see some very clear signs after the open that are indicating that a break of 14 is very likely. So an example of that could be, TF breaks below 15 to 16 and starts liquidating, so it starts leading the downside. Or if the internals are extremely bearish and the momentum is clearly downsided as well, with the tick holding below zero. So we'd have to see some pretty obvious signs in order to take a proactive short anticipating a breakdown. Otherwise, we saw yesterday the market just held that zone, the 14 to 16.5, and then we got to move back up to 22 to 23, and that could still play out even today. In the overnight session, we have put in deeper pullback, pulled back to 1916 to yesterday's low, but at this point, the market could start bouncing again, and it could still break out to the upside, or it can balance and break down. On the downside, we could get a move to 1903 to 05. So even though we have initial support at 08 to 10, I think that zone is better served as a potential target now, as opposed to a spot where we would fade the market, because now we would be breaking below a 3 to 4 day balance, and anyone who bought within that range could liquidate their position short term. Bigger picture, we're still in an uptrend, and I think overall pullbacks can still get bought, but on the smaller time frames, a break below 14 could lead to a deeper pullback down to 03 to 05. So, below 14, the focus is going to be on shorting the market, at least down towards initial support, and then we don't really want to flip to the long side until we've seen some short-term exhaustion. So once the range is exhausted, and we see some exhaustion in real time as well via volume and momentum, putting in a tick extreme perhaps, then we can shift our focus back to the long side and perhaps start taking fade setups at support. But we don't want to fade the market too soon in the event of a breakdown, because there could be a extended pullback in play then, and you don't want to step in front of it on the first liquidation type move down. You want to let it kind of exhaust itself, flush out, and then start trading on the long side again. So in the event of a breakdown, focus will be short, and then we'll flip it to long when we see some real exhaustion in the market, or the range gets really exhausted into a support zone. On the upside, if we hold above 1916, and if we can put a breakout above the prior VPOC of 2175, that would confirm buyers in control, and then that would most likely lead to a new all-time high. Above 24 quarter, we know that there's no hard resistance, but given the types of ranges we've been getting, given the below average volume, a move up to 29 to 31 is doable. Beyond that, you may start hitting a range exhaustion where you've already put in a decent range on the day and there's just not much left in it. We could still go up to 34.75 potentially if the volume picks up, but 29 to 31 is higher odds above 24 quarter, and a continuation up to 34.75 just becomes lower probability. So it doesn't mean it can't happen, but given the recent volatility and range, it's unlikely that will go there on the day time frame. It can still happen in the next session and overall, but on the day time frame, we've seen that the ranges have been between 8 to 12 points, and unless we get a big pickup in volume today, that theme is probably going to continue. 12 points, maybe a little bit more than that, but not expecting a huge range, because even breaking outside of this balance, it's only a 3-day balance. It's not like this huge, multi-week balance where we can get a big range expansion. So there can be some expansion of the range, but not to the point that we can put in 20 points or something. I think 15 points would be kind of pressing it. So really that's the main idea. Markets in balance, looking for a directional break. We don't want to fade the break too soon, and we'll be keeping an eye on the other markets as well. In order to get an upside move, we do want to see NQ trading above 37.25, and TF, the Russell, we want to see it holding above 1120 to 1122. And if the other markets can do that, and then ES holds above 1916, 1915 roughly, above this micro bull bear zone, then there's still potential for an upside move. If the other markets start liquidating, ES starts breaking below the micro bull bear, then we'll look for a downside move. On the econ calendar, ISM non-manufacturing at 9 a.m. Central is really the only potential catalyst this morning. So let's just keep that in mind. Aside from that, let's see how well the buyers can hold it up this morning off the open and take it from there.